Hello, my name is Russell Myers. Welcome to Issues Unite. So, as I am recording this, the Dow Jones is down by 948 points, and that's after dropping by about 700 points in the previous week. Pardon the appearance here, I just can't get the lighting and everything correct on this. But yeah, obviously I'm on the road again. All right, so what's going on here? Well, first of all, the Federal Reserve meeting is tomorrow, and the fact that the Dow is dropping at this point is not a good sign. What's leading to it dropping? Well, first of all, it was divulged last week that a number of the Federal Reserve presidents, including Jerome Powell, were invested in the very funds that the Federal Reserve has been bailing out. In some cases, and invested in Apple, and real estate investment trusts, REITs, real estate investment trusts, and the Federal Reserve has been pumping tens of billions of dollars a month into mortgage-backed securities. So they wound up turning around and having to sell a lot of their stocks because of the ethical concerns. Whether they weren't worried about the ethics while they were making money off it, but once this information came out, and with the meeting coming up, well, this had an effect on the markets, and it's going to have an effect on the markets. How temporary is this? How long-term is this? Well, I'm going to guess it's about as temporary as inflation. And we know how temporary that's going to be. I'm not going to call this a crash. It's definitely a decline. But whether it's a crash or not remains to be seen. And a lot of that has to do with, what happens at that meeting over the next 2 days. So anyway, the main point of this is, this is not going to save anybody from any losses. This is just for information. What happens when a stock or the stock market crashes? The media and financial sources, they all make it seem like the money just ceases to exist. That money does not cease to exist. Somebody's got that money, but let's say you are invested and your stock or your investment account, your 401k, what have you, suddenly loses most of its value. Where did the money go? Well, let's say that your account or investment all go to one corporation. Well, that corporation, they've got your money. The stockbroker, they've got your money. If the stock that you owned was not an initial stock offering, an IPO, then somebody else probably bought that stock before you did when it was cheaper, and then when the value went up, they sold it at a profit. Now, how does all of this actually wind up occurring? So I'm going to put this all in very simplified terms. As an example, let's say I am a corporation, or the CEO. Let's say I'm the CEO of a corporation. And so we decide that we are going to offer an initial stock offering. The number of stocks that are made available is completely arbitrary. It can be any number. A company can offer one stock, or 100 stocks, or a million stocks, a million shares of stock. In this case, I'm going to use 300. So 100 shares of stock are put out on the open market for people to buy. And 100 shares go to me. And 100 shares are kept by the corporation. Why would they do that? We'll get to that. So the company offers shares of stock at $1 each. So the 100 that go out on the market, they sell for $1 each. Well, they quickly rise in value, and so they go to $2 each. Well, now I and the corporation itself have $200 each in assets. This is considered an asset now, and it's worth whatever the stock price is worth. So when the company goes to apply for a loan or what have you at a bank, then they can say, look, we've got $200 in assets. All right, so something happens, and the company is not doing well. So I'm going to use an extreme scenario here. So I know that, our P&L, profit and loss, our earnings report, is due to be released later on this week. Well, I want to keep the $200 that I got in stock value, and I want that $200. I don't want it to decline. But I'm bound by SEC, Security and Exchange Commission rules as to the percentage of stock that I can sell as long as I remain the CEO. So what do? I quit my job the day before the earnings report comes out. The same day, I sell all of my stock to, grab up all of that money. So right now, this is not looking good for the company. I sell off my stock before anybody even realizes that I quit. But once that information comes out, okay, the earnings report is due tomorrow. People are nervous about it, but they don't want to sell off the stock in case it's not as bad as it appears to be. And so they hold on to the stock until the earnings report comes out. And once the earnings report comes out and it reveals that the company is bleeding money, well, now you've got a corporation, you've got no captain at the helm, and you just sailed into a storm. So the stock drops in value by 50%. The investors lost money that paid $1 for the stock. Now their stock is only worth 50 cents. That's all they get back. And now the company that had $200 in stock, well, now it's $100, which is exactly where they started. But the company has $1,000 in debt, bleeding money, so it's costing them money to keep the doors open. And, so now the stock drops, just continues to drop, and they can't get a loan at any decent terms. So the company winds up having to do the only thing they can do. They declare bankruptcy. Now the stock is completely worthless. Let me bring if you multiply this hundreds, thousands of times across Wall Street, this is what happened in 2008. This is how a stock crash occurs. And by the way, you don't have to be invested directly into my company. That if you are invested in an investment fund, well, your investment fund may have an investment in another fund which is invested in my company. So your exposure doesn't have to be direct. You don't have to directly own the stock. You don't have to be invested in a fund that directly owns the stock. You can be invested in a fund that invests in a fund which takes a hit because they were invested in the stock for my company. It's all a house of cards. And when one goes down, they all fall down. It's, just a domino effect. And let me point out that a number of CEOs in 2020 and in 2019 actually did quit their jobs so that they could sell off the stock in the companies that they were the CEOs of. And not just CEOs, but other corporate executives as well. Chief financial officers, technical officers, operating officers, they all did it. Hundreds of corporate executives quit so they could sell off their stocks without coming up against SEC rules. I'm going to point out that these are the kind of people that they can have a car and find out that the engine has a crack in the block. And they'll put, engine sealant in the crankcase and turn around and sell the car to a single mother without telling her about the crack in the block. That's exactly what these people do. This is capitalism. This is how Wall Street operates. They do not care that millions of people can lose their life savings because of their actions. And whose fault is it that the company was bleeding money, that the company was completely failing? And it's their fault that it happens. And then they profit off of that failure while you lose your life savings. But these are their ethics. This is why I say there is no such thing as ethics in capitalism. As long as they make a profit, it's completely acceptable. That's how capitalists operate. So we're going to have to wait and see just what happens with this Fed meeting over the next 2 days, and see what happens with the stock market as a result. I'm not in favor of being of investing in the stock market at all right now, and have not been for years. If you've got money in the stock market, you might want to consider pulling it out right now before it falls. Because once it starts falling, the people, the average person, they're going to be the last ones out. Okay? You know, the big investors, they're the first ones out. The major funds, you know, they're going to get their high dollar people out first, and you come last. You come absolutely last. Some day traders may be able to save themselves, maybe, but even that is not guaranteed. All right, so share this video, talk about these subjects. I hope this clarifies a little bit of exactly how the stock market really works and what happens when there is a crash. Like I said, that money doesn't cease to exist. Somebody's got it. Somebody's got your money, but you don't have it. You don't have your money anymore. All right, if you can, please donate $1 a month to help expand the channel. I'll catch you in the next one.